Welcome back to the channel. In this video we are looking at the most undervalued stocks owned by retail investors. Robinhood has investor index which includes top stocks owned by users on the platforms. These stocks include Meta, Walt Disney, Tesla, Ford, Nvidia, Apple, GameStop, Microsoft and Amazon. In this video I will be ranking them for three categories: buy, hold and sell. I will do a very quick analysis on every of these companies and I will give you my thought if I believe this company is undervalued at current prices. What's going on, investors? Hopefully guys are doing well out there. Let's immediately start with the company number one, Meta Platforms. For every company I will highlight positive and negative recent developments. Meta recently having a lot of progress with AI. They are working on Llama 3. Meta is developing Meta AI, which integrated across Instagram, WhatsApp, Facebook. I already played around with this. It's not as good as ChatGPT, but I believe Meta will be there relatively soon. Meta has strong revenue growth. In Q1 2025 revenue grew 16% year over year. Also, Zach started to do optimization of the costs in 2023, and currently we see operating margins are reaching 42.2%. From the perspective of negative developments for the Meta platforms, we still see significant losses from the metaverse, and also Meta is facing a lot of regulatory pressures from United States and also from European Union as well. I believe Meta is a hold currently at April lows. Meta was probably a buy, closer to a buy level, but currently Meta is just a hold because if we are going to experience a recession, Meta will have significant drop in earnings, which will lead to the share price drop as well. Continue with the next company, Walt Disney. Disney's streaming service finally achieved profitability, which is very nice news for the company. Also, Disney announced plans to build a Disneyland in Abu Dhabi. From the negatives, some parts of the business of Disney is declining. Media networks revenue is declining for a few years already, and also of course the competition. Disney is an important player in the streaming industry and the competition there is severe. Currently Netflix is the only company which can operate profitably in streaming, and we can see that Disney just recently reached profitability but close to the break even at the moment. I would put Disney at a sell category. The company is in a very competitive industry. The growth is not very fast and the valuation is not dirt cheap. So myself, I would not touch Disney at these prices. Coming to the next company, Tesla. From the positive perspective, Tesla's energy generation and storage revenue surged 67% in Q1 2025, which is very nice. Of course, current investors in Tesla are not investing for the car business. We are investing for AI and robotics. And currently Tesla Optimus humanoid robot already showing performing warehouse tasks. From the perspective of FSD, the full driving version 12 already widely rolled out, and Tesla is licensing FSD to other automakers. There is a rumors that Honda will have a partnership with Tesla. From the negative perspective, we see the slowing EV demand, a lot of competition, and also interest rates is of course the headwind for the company. Margins compression, automotive gross margins declined significantly, and also to make sure that Tesla can scale out the FSD, we need a lot of regulatory and legal approvals for the company. I would put Tesla at a hold category. I mean, obviously, as a car company, Tesla is very overpriced here and should be at least 70% down from current prices. But as I mentioned, investors in Tesla are investing for AI, FSD, and robotics, and these developments are currently in progress. So we are waiting and looking at the management to execute on these fronts. If you're enjoying videos so far, please consider subscribing to the channel. On my channel, I do stock fundamental analysis, I run public YouTube portfolio, I do educational videos. If any of that interests you, welcome to join. That being said, let's continue with the next company. Coming to the next company in the list, and this is Ford. From the positive perspective, Ford has kind of advantage for the tariffs because Ford is manufacturing cars in United States. From the negative perspective, we see Ford still cannot make profitable EV and projecting losses in 2025. In European market, Ford is planning to cut 4,000 jobs by 2027 due to weak EV demand and increased competition, especially from Chinese rivals, and also uncertain financial outlook. Company withdrew its full year 2025 guidance amid tariff related uncertainties. To tell the truth, I'm not sure why so many people invest in Ford. If you guys have a long position in Ford, please let me know in the comments your bullish thesis on this company. For me, I would not touch this company and I would sell if I have this in my portfolio. Coming to the next company in the list, Nvidia. Nvidia is just a beast of a company. Data center segment grew staggering 93% in the latest quarter, reaching 35.6 billion in Q4 2025. Nvidia is absolute leader in AI hardware. The competition is very far behind. Nvidia is well positioned for the AI future. It's inside the AI hardware, robotics, and self-driving software. From the negative perspective, we see geopolitical and regulatory challenges, especially when the US government is forbidding Nvidia to sell some chips, some high performance chips to China, for example. And also, Nvidia has competitive pressures, especially from Chinese competitors like Huawei. Another problem for the Nvidia is inside the semiconductor industry, and semiconductor industry is very cyclical at nature. The growth Nvidia is delivering and the valuation currently is trading, Nvidia is definitely inside the buy category for me. The next company in the list, Apple. From the positive perspective, Apple has services revenue and it reached 26.6 billion in Q2 financial year 2025, 12% growth year over year. This is a very high margin segment. Apple is expanding iPhone production in India to mitigate tariff impacts. From the negative perspective, Apple is underperforming in AI and we did not really see a lot of developments in innovation, and also the Vision Pro is absolute fail. Geopolitical pressures. President Trump has criticized Apple's decision to move iPhone production to India, and also DOJ investigation. Even though DOJ investigation is for Google, but still they are investigating the $20 billion every year Google is paying to Apple to be a default search engine for Safari browser in Apple operating system. So there is a risk here that Apple will not be able to get this $20 billion every single year, basically 100% margin for this revenue. Even though I'm Apple fanboy and I have a lot of Apple products, I'm not really fan of Apple stock. I would put Apple at a sell category, even though I think many people will argue with this decision, but I believe that relatively slow growth and high multiples for this company will not deliver significant returns for investors. Coming to the next company in the list, and this is GameStop. GameStop is optimizing and cutting expenses. They exited Germany and Italy, reduced underperforming stores. Another positive development is that they announced that Bitcoin will be added to corporate investment policy. From the negative perspective, the revenue is declining 10 years in a row. This is legacy business, and basically the company is slowly going to zero, and the management understanding that, so they are trying to find some other opportunities. They try to find new ventures like trading card authentication, but this currently lack clear payoff. And also I believe this is a relatively niche market where the GameStop will be helping to authenticate the trading cards like Pokemon cards and stuff. So I believe this is relatively niche market and will not be able to generate significant revenue from these business segments. In addition, because they entered the crypto market, currently the price of GameStop will be attached to the price of the Bitcoin, which will add additional volatility to the stock. For me, GameStop is definitely in a sell category. This is basically the play for the short squeeze for Wall Street bets in 2021. Currently, I'm not sure who is still owning this company. This company has no fundamentals. If you want to make money by investing over the long term, you definitely need to invest in high quality companies with strong fundamentals, which GameStop is definitely not one of them. We have two companies left, Microsoft and Amazon. Which do you think will go to the buy category? Let's continue with Microsoft first. Microsoft has a lot of positives and almost no negatives. From the perspective of cloud service, it's taking market share. Currently, Amazon is a top one cloud computing provider in the world, and Microsoft is actually taking market share from Amazon. Meanwhile, Microsoft is integrating a lot of AI and innovation. In Build 2025, Microsoft introduced north of 50 AI tools. They are doing strategic partnerships with OpenAI, Anthropics, and xAI. In addition, most of the revenue of Microsoft is recurring, which is highly predictable and recession proof. From the negative perspective, I found only one thing: it's trading currently at the top of historical multiples in terms of the forward price to earnings. I bought Microsoft during April's tariff market crash, but currently I put Microsoft at a hold category, and I do not think that buying at the current prices will deliver significant returns for investors. And coming to the last company in the list, Amazon. Amazon Web Services remains the largest cloud provider globally. Amazon is doing a lot of AI and innovation. They're investing heavily in AI for logistics, cloud, and consumer experiences, introducing the new generative AI tools in 2025. Amazon has a lot of optionality. They're expanding in advertising, streaming, and groceries. From the negative perspective, the margins are still very thin, but this is one of my most important bullish thesis on Amazon is that currently the revenue for Amazon is almost north of $700 billion per year, and just a few basis points increasement in margins will lead to significant generation of net income and also free cash flow. Robotics, cost cutting, and performance improvements will bring tens of billions of dollars to the bottom line for Amazon. Amazon is inside the strong buy category for me. Amazon is taking 26% of my own personal portfolio. I'm very bullish on this company. Let me know in the comments if you do not agree of any of the rankings and you would rank the company differently. I promise I will read all the comments and reply. Thank you so much, my friend, for stopping by. I appreciate your time watching until the very end of the video. Thanks so much, and I'll see you in the next one.